Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.
Is $2,500 per ounce gold just the start? This is Paul Harris for Kitco Mining at the 2024 Precious Metals Summit in Beaver Creek, Colorado. And to help me answer that is keynote speaker Florian Grummes, Managing Director of Midas Touch Consulting. Florian, welcome back to Kitco.
Thank you, Paul, for having me. It's a pleasure.
Gold is at $2,500 per ounce. I recall that you and I sat down almost a year ago in Zurich in November, and you were calling this gold breakout. Are you pleased with your call? Has it turned out as you forecast?
Yeah, more or less. I think I missed it by $4. No, but we said back then in Zurich, gold needed a monthly close above $2,000 to trigger that breakout. Because the 4 years before, gold had been running against this big resistance zone, $2,000 to $2,075. And it did. Finally, end of November, it broke out. And then the rally started as expected. And until mid of April, gold was rallying $400, $500, reached $2,430. And the thing that I didn't really, I cannot say expected, but what I also didn't really like is this price action the last 4 months, which was not trending, which was not very much driven with momentum. It was more like back and forth, rather tenacious. You had big down days, very irritating big down days. And then a few days later, gold kept creeping higher again. And it was difficult to see if this is really still trending higher. But it made still new all-time highs constantly over the summer. And now the latest one is 2,531. So back then in November, I said 2,535. That was the target. And here we are, we reached it. And now the big question, of course, is how do we continue from here? And textbook-like, I've been always referring to this big cup and handle pattern, which has been in place since the top in 2011. So gold basically worked 13 years on that huge pattern. And the first price target out of this pattern was 2,535. And another price target is, roughly speaking, $3,100. So that's still in the room.
And this is the message you gave yesterday during your keynote, isn't it? I think you phrased it something like the countdown is on. Gold is on its way. It could now reach $3,000 per ounce.
Right. So that's the big question. Do we get the textbook kind of like pullback first back to that former resistance zone, which is now support, let's say 2,050 to 2,150, maybe even a pullback towards 2,200 would already be enough for that kind of textbook scenario? Or is gold so strong that it actually just can continue pushing higher? And if we blend out all the talks and all the macro thoughts and everything and just look at the price action, you just simply have to admit gold is very strong, constantly keeps coming back on its feet. Even you have a big down day, even you have a big sell-off, $20, $30, $40, $50. Even the same day or a few days later, there is again creeping higher. So there is bullish action. There is a big buyer in the market. I assume the physical demand out of Asia, China, and now we heard Russia also buying even more, is probably forcing gold higher. So I don't see any bearish indication here on the chart. So I assume the scenario, or the probability for that scenario to go directly towards $3,000 is actually pretty high.
Now, gold has been very resilient, as you point out. On your Twitter X feed, you've got a wonderful graphic about what you call the four horsemen of the economic apocalypse. Are these the things that the forces that you expect to drive gold to higher levels?
Yes, that could be. I mean, I copied it from Michael Pento, but the idea behind this is, of course, if we get that big kind of crash in the stock market, you need to have some protection, and that basically refers also to gold being a safe haven and an anchor in such an environment. And that is another big question, obviously. The stock market has been driven by just very few big tech AI stocks over the last 2 years. It doesn't look as a very healthy, broad rally. We know it's been driven by fiscal stimulus. And usually in the past, whenever the central bank in America had to lower interest rates drastically, the market at some point realized like, oh my God, it's really that bad. And then actually a crash started in the past. So if we get that type of scenario, then this picture, the chart with the four horsemen, is basically your recipe or your guide.
And I should perhaps clarify there that the four horsemen that you refer to are short-term treasuries, the US dollar, cash, stock market shorts, and of course, gold. Now, in your presentation yesterday, you also talked about, if gold gets past $2,540 per ounce, we're in the territory of perhaps a super bull. If a super bull does, let's define what you mean by a super bull and what would that mean for the market?
So any gold rally that I have personally experienced over the last 24 years has been characterized by a grand finale, by like a final exaggeration kind of phase where gold is spiking higher rather vertically in a very short period of time. Within a few weeks or 2-3 months, it goes rather vertically. And the last time we've seen that was in the summer of 2020, after the Corona crash and COVID in February and March. The Fed had pumped billions of dollars into the markets, and gold was one of the strongest markets back then. And I think it was, when did this rally started? In May. It started from 1,700, quickly went to 2,075. So gold gained nearly $400 in just two and a half months. And something similar I could expect now. Basically, this rally started in the gold market 2 years ago at 1615. We had a triple low. And here we are now trading basically, nearly $900 higher. And still, you don't see real euphoria in the streets, right? I mean, people are happy who have physical bullion. They're rather disappointed if they hold mining stocks, but it's not like this crazy party that you would expect at $2,500. And I think many people still have missed the rally. And there is still a lot of buyers at the sidelines. So we have seen that the gold ETFs, the holdings, basically have been falling until spring of this year. They were not the driver of that gold rally. They are now coming into the market. And so there's potentially a lot of people still ready to come into that market. And that could drive that final spike where you could see gold running higher, $500 within maybe 2-3 months. I think it's possible. And that would be a spike, a real trending phase. And that probably would bring in a lot of generalists and people FOMOing in basically into gold. And that would create this typical spike at the end of a long rally. And then also, of course, once the top is in, it will drop hard and quick.
We are at a mining investment conference, and I want to talk about mining stocks in a moment. The atmosphere, I think, is a little bit sullen here, and I think you'd agree with that. In terms of this Super Bowl, what's the real trigger for that? The US Federal Reserve is expected to start cutting interest rates. Some people think there could be 2 or 3 rate cuts before the end of the year. Will that be the trigger to get that Super Bowl running?
It could be one of the triggers. I think generally, I believe price is the main driver always, because markets are a mass psychological phenomenon. So the more people watching a rising gold price, the more they have this fear of missing out, the more they want to participate, the more they also hear in the media, the more they hear from friends making money, so they want to join. That attracts more and more people and money into the sector. So I think it doesn't take much anymore. We are seeing that gold is holding up really well around the $2,500 level. Any pullback is being bought. Always the bulls coming back into the market. Yeah, maybe seasonality-wise, we have the Golden Week in Shanghai early October, the first week. So maybe we're going to see a little bit of a weakness in the next few weeks. We could test maybe 2,470, 2,460, maybe even 2,450. But as long as this support holds, I believe that, further we go, there's a very good chance that gold will break out. And it could also be continuous physical demand out of Asia. We heard last week the Russians are increasing their daily gold purchases to 1,100 kilos a day. That's up, I think, 630% to what they used to buy. And I think they're doing this for obviously geopolitical reasons, trying to basically attack the dollar. All the BRICS nations trying to move away from gold. I mean, there's a lot of reasons that already triggering this rally and will continue to trigger that rally. And Yeah, I think I don't see any bearish sign in the chart right now. I would tell you, but I don't see it at the moment. So the probability is there that we're going to see a really nice run higher in gold until maybe end of the year, early spring next year. But I will change my mind if I see gold dropping below that April high at 2,430. That is right now my line in the sand where I said, okay, from that point on, probably now we're in that pullback scenario. But right now, I don't see it. So.
Okay. A moment ago, you mentioned that we're finally starting to see Western investors come back, getting into ETFs and things of that nature. Why is this important? What does it signify? Do you see investors, Western investors, starting to rotate back into gold and gold stocks?
Yeah, I think gold has been completely ignored in the West. I mean, it's no secret that for years, gold basically is moving from the West towards the East. And it's very obvious, and we all know this rally over the last, let's say, 11 months has been driven by geopolitical events and driven by physical demand from China primarily. And the Western investors have been focusing on AI and a few stocks in the tech sector, right? There was no interest in safe haven assets like gold and silver. And that might change if the price rises. Yeah, I think, as you mentioned, the gold ETF holdings are increasing. There is a trend change now. In the past, that used to be a big driver in the gold rallies. And it's still, the Western world, still the American stock market still is the deepest capital market on the world. So if there is some more excitement for gold, yeah, a lot of money can flow into that sector.
Now, gold's at $2,500 per ounce. The gold producers are starting to show margin expansion, adding real cash to their balance sheets. Yet, one of the things I'm hearing from a lot of companies here, there's still a lack of investors in the space. It's still incredibly difficult to raise money. And again, within the context, some gold names are up 50 to 100% year to date. That's very big value growth. Albeit, gold stock prices perhaps fallen 50 to 70% in recent years. Still, there's some potentially very large gains for investors to expose themselves to. Why do you think sort of the broader investment community hasn't yet picked up on the fact that, hey, this is perhaps the good time to get in and get full exposure to that 50, 100, 150, who knows how much gain going forward?
Well, I mean, there is the truth that gold mining stocks have been disappointing many times in the past. And at the same time, I mentioned it already, this AI frenzy was much more exciting. And we're living in the 21st century. Everything is digital. It's all about the latest apps, the latest software, the latest whatever you can use AI with. And I think gold mining stocks are just very much an old-fashioned investment to many people, right? And many people don't even understand the situation that we have in the financial system, and they're not aware that we're living in a paper money system which is backed by nothing. They're completely disconnected with these kind of things. And on top, many people are so busy with their little lives from 9 to 5, they just take whatever the mainstream media is telling them to do. And gold has certainly not been a topic in the mainstream media recently. And if there would have been a topic maybe to protect yourself against the loss of purchasing power, it would have been Bitcoin, right? So I think they're coming together lots of reasons. But yeah, at the end of the day, if you see rising prices and if the mining stocks now catching a bit, and some of them have done really well, overall they have disappointed, but if you've been a stock picker, yes, I think you have done well. Agnico Eagle, Alamos Gold, Calibre, some of those names, they have really done well. And I think there's still much more room to the upside. If we see gold going to 3,000, yes, you're going to see much more excitement in those stocks.
You've mentioned a couple of things that I think could be key here. You mentioned FOMO, the fear of missing out, and perhaps the role that the mainstream media plays in this. Perhaps once the mainstream media starts identifying that some mining stocks have had that 50 to 100% gain and potentially have a lot more to come, that's when the fear of missing out will kick in and people will, more general investors will start cycling back in and say, hey, what can we buy?
Right. And I mean, you also have to mention, I mean, there's been a lot of restrictions now in terms of ESG. I think a lot of big capital investors are unsure if an investment in the mining sector meets these standards, right? And the industry still has to catch up with doing their homework and educating, basically, that in most cases everything is done according to these standards. Huh? But then, of course, we had two big failures with SSR mining and with Victoria Gold, and that again triggers these old beliefs about a dirty kind of business, and so it's a challenging situation, right?
I think one of the interesting things about the ESG, I sort of fully agree with you, but one of the interesting things here in the United States is at a state level, a lot of states are pushing back against restrictions on ESG because essentially they're saying we want to be fully exposed, we want investors to be able to be fully exposed, so not restricting things on ESG basis. And I think the SEC is making rules and regulations on that. One thing that can get people really excited and animated is mergers and acquisitions. You know, deals going through, high prices, premiums, things of that nature. We've seen a couple in the past couple of weeks. Could that be a good trigger for getting interest back into the mining stocks?
Definitely, and I think that's also one of the insights that you can gain from this conference here. There is much more action now, and it's coming, and there's more excitement, there's more deals being done, and that will trigger more interest in the space. And it's been actually always like this in the past, so once the big players are starting to move, then yes, you get that momentum into the sector. And I think we're right there at the beginning now.
I think one thing I've sort of picked up on is that given the disparity in the share price appreciation amongst companies this year, some companies' paper has elevated in value considerably relative to other companies, and so there could be some good leverage there to exploit in deal making.
Right, for sure. I'm very sure about it. We've seen some interesting deals. I hear some interesting deals. So it's catching up. So it's an interesting time. I'm not the guy to run behind stock prices. You always want to be a little bit of a contrarian, but at the same time, we are at that situation now. If gold really starts to break out, it could happen fast, and then you need to also act fast and not wait anymore. So keep in mind the Golden Week in Shanghai. That could still be a little bit of a challenging situation in front of us. But I would say also together with the S&P, which usually bottoms out somewhere mid of October, 14th of October usually. After that, I think, it looks pretty promising, especially for the mining stocks.
Okay, so at the start of the conversation, I mentioned that when we last sat down almost a year ago, you made a very bullish call, what turned out to be a very accurate call. If you're looking forward ahead 6 months, 12 months, what's your call now?
So I am still a little bit cautious because I tried to explain you that there are, of course, I mean, we've seen a massive rally in gold, right? And there is, for example, the commercial short position in the COMEX is at very unhealthy levels. In the past, that usually brought the top in the gold market. Everybody who has been betting on a blow up of the COMEX over the last 25 years has been playing a loser's game. Maybe the Russians are able to trigger that. I don't know. I think we've been never closer than now over the last 25 years. And if there's a short squeeze, it could take gold to $3,000 rather quickly. So I'm trying to do this a little bit more diplomatic this time. So if gold can get a weekly close above 2,540, it triggers my super bullish event, my super bullish scenario, and I expect gold to run to $3,100 rather quickly. If gold closes below $2,430, I'm becoming a bit more cautious and bearish, and that might happen if we see more stress in the general stock market. It's not the preferred scenario, but it's the alternative we have to mention this time.
Excellent. Well, look forward to catching up with you again in the future and reviewing your latest call. Florian Grummes, thank you very much for joining us today.
Appreciate it. Thank you very much, Paul. Always a pleasure.
And we have plenty more to come from the 2024 Precious Metals Summit here in Beaver Creek. So don't forget, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.